What's up everybody? Welcome to the Stocks channel. Today the stock market closed at a very critical support as we're going into a very important earnings report tomorrow night with Nvidia. Will the bulls have what it takes, or is this bull trend ready to roll over and head lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was down 0.55%, and as I said in the introduction, tomorrow night will be Nvidia's earnings, and that has by far been the number one market moving stock this year, so that will be a very important event because that stock has gone very far very quickly, and in order for it to continue to go higher, it is going to need to show very promising earnings. But as we've seen, they have been able to follow through lately, and we have no idea what those earnings are going to be until we get the official word. So this is going to be an area in the market where you should be just a little more cautious and a little more risk off until we get more clarity from this price action. So if we look at SPY, we can see we closed right on top of the support trend line right here at 496. And if we go a bit lower and we start to break down below 491 to about 490, this is going to look like the market double topped, but it could happen very quickly because of Nvidia's earnings. Now, this is not a confirmed double top. It could simply be a pullback from resistance into a higher low, and we then could bounce off this support and still go hit that price target at 507. So do not consider this a double top unless we start breaking down below support. And that is what's called the neckline of the double top. And then below this neckline, it will look like SPY is going for that full measured move lower to that rising 50 EMA, which is going to take us down into the low 480s. And while we're down there, it will be possible that we test the breakout at 478, assuming we do break down below support. So if you look at the probabilities and you look at the odds, we still have the bull trend in SPY, and we're very close to confirming a double top. So if we break down, that is now going to be about a 1.3% drop to tell us we're going to the low 480s. That is very low risk to take as a bull within a bull trend, so you will start seeing people buying the dip at support because they know if they lose this trade, it is going to be a very small loss, and that is the definition of a low risk entry. So bulls that are still confident in this trend will be buying the dip near these support zones at 496 and 491. And then if we break down below support, they will simply get risk off, and that will be enough selling pressure to bring us down towards that gap fill and support in the low 480s. So this is not a risk off look in SPY just yet. This is time to just be cautious and be very careful how you're trading because we could have a large move overnight after we get that Nvidia earnings tomorrow night. So as you can tell, we still have the bull trend. So I'm not telling you do not buy at support. This is a time to buy at support for low risk entries. You just need to be aware that high volume selling can happen very quickly. And if we do start to get high volume selling, you want to have plenty of dry powder and plenty of cash. Now to the upside, if we start to bounce, we need to break that resistance up there above 502, and then we will go to 507 and then 514. And remember, while SPY is above 478, we are still in what I'm calling the blow off top scenario, which means at any point we can get a parabolic rally higher and get full blown bearish capitulation to mark the top. And then from there, if we do get the blow off top, we will start coming down in this market. We haven't had it just yet. We're in the scenario now, and we're still above support within a bull trend. So be very cautious if you're getting overly bearish. If you're bearish here, it's much better off to just sit in cash because we still do have a very powerful bull trend. On the Nasdaq 100 triple Qs, we were down 0.75% today, and the triple Qs did confirm a lower high rejection from that price target up there at 434. And from that rejection, we did come down here and break the low at 424 intraday. Even though we did close above it intraday, we did break down from a lower high into a lower low. So what that means is there will now be bears looking at this thinking this is a lower high rejection into a breakdown, and they could be saying that we are going much lower, and they could be very right, especially if Nvidia misses their earnings tomorrow night, which means we could see the triple Qs coming back down towards the low 413 all the way down to about 411. Now keep in mind, this is not going to be the scenario if Nvidia does well on earnings. This is likely just going to be a very lazy pullback, and then we're going to continue higher towards a brand new all-time high, which is going to be up there in the low 440s. So on the Nasdaq 100, especially looking at the triple Qs, you could be risk off below 428. And then if we start to break back above 428 and we start to see some strength and get back over that 20 daily moving average, then you can get a lot more bullish for the potential that this was just a pullback and we're going to another all-time high. However, that is dangerous to do, and this is why I suggest you be cautious here and have plenty of dry powder, is because now that we're below 428, the high volume selling that we haven't seen yet could be right around the corner. And if we do get the high volume selling, it is going to be a very quick trip down here towards 411 to about 415, which is going to be a very critical support zone, which I do expect to find plenty of buyers in the event we do go down to that support. So on the NASDAQ 100, you have this pivot point right here, right around 424. And as you can tell, we already did start to get buyers off of that support level intraday, and we did close higher on the day. However, we cannot write off the fact this is clearly a lower high into a lower low. And if you look at this trend line now, we do have resistance heading lower, and that is something the bulls will want to fix immediately. On the Dow Jones, we were down 0.13% today, so the Dow Jones held up very well, and intraday we did fill this gap down here at 384, so we can delete that gap, and you can see that gap fill was also the support at the rising 20 daily moving average, and we did close above 385 yet again, and I continue to tell you above 385 we can and probably will go to 391. So in the Dow Jones, it's as simple as staying bullish above 385, and then above 385, look for 391. And if we break below 385, we need to hold this support at 383. And if we break down below 383, we could come all the way back down to 377. 377 is critical, so the bulls will need to hold that level to maintain the bull trend. But as you can tell, it will be a weakened bull trend if we do break down here at 385. On the Russell 2000 IWM ETF, we were down 1.38% today, and we closed right on top of this support trend line right around 198, and we did gap down, so we have another gap to fill above 201, and we are still above a rising 20 daily moving average of support right around 196. So in the Russell, I think it's as simple as staying bullish above 196, and as long as we are above 196, I still think we're going towards that price target at 207, and then above 207 we go to 214. If we break below 196, that will look like a bearish rejection, and it means we need to hold the support down here right around 189. And if we break below 189, we're risk off because it could mean something's wrong and we're going much lower. On the ARKK ETF, we were down 3.26% today, and we opened another gap down. So we have a gap to fill up here just above 50.2, and we are still holding this very important support at 48, and 48 is where I suggest you stay bullish. And if we break below 48, simply get risk off. Above 48, I think we go fill the gaps above 50 and above 52, and below 48 will likely come back down to test this critical support zone right around 45. On the VIX, we were up 4.83% today, and the VIX did close above 15 for the second day. And while it wasn't the second day in a row, we are definitely seeing a lot more fear coming into this market. However, this is still relatively low fear until the VIX starts spiking all the way up here above 18 and starts getting out there above 18 and 20. So this could still just be a normal pullback. Again, a lot of this will depend on how Nvidia does on earnings. There's a lot of eyes watching that stock, and there will be a lot of panic selling if they miss their earnings. You can't predict an event like that, so simply trade lightly until we have more clarity, and we are going to have that clarity as soon as tomorrow night. On Bitcoin, we're currently up just over 1%, and Bitcoin is still holding that very bullish breakout above 47,000, so stay bull above 47,000 because there's no telling how high this is going to go. It's in a very powerful bull trend, and we did hit the price target at 52,700, and then above 52,700 we go to 55,000, and then all the way up here right around 58,000. Now there will be lots of resistances up here in the 50,000 range, but typically Bitcoin is going to blast right through them and go to a nice whole round number, and that is likely going to be this price target between 55,000 and 60,000. If at any point we start to see high volume selling and we cannot hold this breakout of support at 47,000, then you'll want to get a lot more risk off because we could be going down much lower. But right now we have a very powerful bull trend, and it does look like we're trying to go higher. On Nvidia stock, we were down 4.35% today, and this is the stock I've been talking about, and this is the earnings report everybody is going to be paying attention to, because as you can see, this stock has been going up a very fast pace, and the reason it's going up at such a very fast pace is because it's absolutely blowing earnings expectations out of the water. And if we go back to May of 2023, they only had an expected revenue of 6.5 billion, and they beat that by 10%. And then very late 2023, the earnings were expected to be 11 billion, and they beat that again by over 20%. And then fast forward to November of 2023, and the earnings expectation for revenue was 16 billion, and they blasted that out of the water by 12%. And now the earnings expectations for revenue are going to be over 20 billion. And if they blast that out of the water again, do expect to see Nvidia trading higher, which is likely going to mean we at least hit that price target right around 750. And if we break through 750, we're well on our way towards 800. Now, there's no way I can tell you as a technical analyst whether or not they're going to be earnings. And of course, you know I'm not going to try to predict that. However, I will tell you we did gap down, so we know there's a gap to fill up here at 725. And if earnings are halfway decent, I would expect to see Nvidia hold this support at 669 and bounce up to at least fill that gap at 725. So critical support in Nvidia will be right here at 669, and if we break down below that, get risk off, or you can just stay risk off below 703. But do remember, with earnings, it's going to be a very quick after hours move, and it's very difficult to trade, and I suggest you just sit in cash and then trade the price action after earnings. So those are going to be your critical levels in the critical zone, and if we break out of this range, then I'll have more price targets for you coming up next. On Tesla stock, we were down 3.1% today, and Tesla could not hold that breakout at 197, even though we were above it for 2 days in a row. I still think there's a very good chance we will break above 197 and fully close that gap below 207. So for that reason, I think Tesla is still bull above 183. And if we break below 183, then you need to get risk off because we're likely coming down towards 167 to 173. So watch Tesla closely here, and you can also draw in this trend line, and if we break down below that trend line, that's going to be another indication we could be going lower, and that support is going to be right around 187. On Apple stock, we were down 0.41% today, and Apple is very interesting because if you draw out this giant head and shoulders pattern that is now developing on the stock, we are currently sitting right here at the neckline at 180, which means if we break down below 180, it could mean that we're going the full measured move lower, which is easily going to take us into the low 170s. So for that reason, this could be a bear trap because this is a very obvious head and shoulders pattern, which is going to invite bears into Apple. But there's no easier way to say it than you have to be risk off below 180 or stay risk off while we're below the 200 daily moving average right around 183. It doesn't matter how you trade it. It simply matters that you manage risk. And this is a very obvious pattern, which sometimes means it could be a trap and it could fail. So even if we quickly break down below 180 and break that neckline, look for that support at 177. And then if we start to see high volume buying and bouncing off of that support, consider it was a bear trap and we're going higher towards the gap fill at 186. And that could mean we're going to trap some bears before going higher towards the price target at 195. So play this very carefully around 180, and below 180, you get risk off until we break back above it. And then above 180, you're risk on to the higher target above 186. So jumping back over the S&P 500, tomorrow night, Nvidia's earnings will be very important because I do consider that this year's market leader, and the market leader has to remain strong if the bulls are going to remain confident. So the technical analysis looks like we could go anywhere from here, and that's very common when we get to these very important events. And when you get these very important events that can go either way, you are going to be much better off simply having low risk trades and having lots of cash. That way you can properly react to the price action after the event. So be patient, be disciplined. There's always another great trade right around the corner, and there's no reason to force a trade here. And then once we see what happens after tomorrow night and with Thursday's price action, we're going to have a much better idea of where this market wants to go, and we can place the trades accordingly. This is how we follow price action each and every day, and this is what I'm teaching you to do on the Stocks Channel Discord server. So if you want to come learn how to trade price action with me, you can find out how to join the Stocks Channel Discord server below. For those of you asking where is the link, you simply go to thestockschannel.com and you will see how to sign up for the Discord there. If you want access to buy and sell alerts directly for TQQQ and SQQQ, then you can join Bank Trade Alerts, and you can find out how to join that in the link below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.